One of the biggest opportunities for SOFI over the next decade is your technology platform. However, not many people understand what that technology platform even is or does. The fact of the matter is that many legacy players right now are struggling to transform their business and adapt for the future. And this is where fintechs are gaining ground. In this video, we will be breaking down a recent interview conducted by Michael Haney, the head of Digital Core at Technisys, focused on why legacy players are struggling to adopt in this market and potential ways that they can catch up quickly. This interview was conducted back in December. Galileo posted it on their YouTube page. It didn't get a lot of views, and I realized it was somewhat of a hidden gem because it gave a lot of insights on how Technisys is thinking about digital transformation and on the whole landscape, how it has progressed over time and how it will continue to progress with regards to legacy and fintechs going into the next 10 years on a digital transformation perspective. Now, what I'll be doing is I'll be summarizing a lot of the points. This entire interview was 25 minutes. It's going to be attached in the link below. I'm hoping to make this video much more condensed than that. However, I will also be including clips of that interview to help drive home the point. This video did take a long time to make, so if you do enjoy it, please drop a like and subscribe to the channel for more content. Now, Michael began to break down the landscape, saying that back in the 1990s, the focus was on self-service and how do we create self-service channels. By the 2000s, this focus had shifted to digitizing the physical world within banks. So this is, the paper statements became electronic statements. This is notifications. How do we digitize that current banking experience where you don't have to go into the branch? Now, in the present day, and going into the future, we are seeing a further automation of these processes, and we're actually seeing an elimination of the human element of banking. So essentially replacing the actual workers with AI to reduce costs and also to reduce human error in that banking experience. Now, this newest wave of digital transformation is about solving problems, and the shift is so large that it's changing what banking even means to many people. And as a result of this, we're starting to see new products and services that were previously impossible to implement in previous years. Mobile has today become the preferred channel of banking. Over 90% of people in the US are using mobile banking channels. This allows for self-service, and it allows for the convenience of banking on your own time, right? You don't have to wait for a bank branch to be open. You don't have to wait for a customer service rep. You can just open your app on your phone at 3 a.m. and check your bank balance. Traditional players have had to catch up with fintechs in the mobile banking framework as well. However, legacy players have historically had two advantages. Number one, they have a depth and breadth of expertise. So basically, they've been doing this for a long time. They know what their products are and how their products work. Number two, they have very, very deep pockets. They have a lot of abundant resources, so they can throw money at the problem and they can catch up faster. And again, all of these points are summaries from that video of Michael Haney's that he is seeing in the industry today. He's also said that channel preferences continue to evolve rapidly, and it's difficult to predict where these channels are going to be focused on next. As I said, today, mobile is the main channel of preference. However, in the future, the Internet of Things could lead to banking on smartwatches and other devices, something that's more integrated with your life, that's easier to use from a user experience perspective. It's important to also note that no channel truly dies. You'll still always have customers in the legacy banking side who want to mail in their request to cancel their account. That exists today. It existed 20 years ago. It's probably going to exist in the near future by some legacy player, yet it'll have very small amounts of volume. So no channel truly dies. All channels are out there, but the channel of focus, which today is mobile, that shifts rapidly as banking evolves further and further. Mobile is dominant today, but it won't stay dominant forever. And one of the interesting points he made was on incumbent banks. They also benefit from users who are active on more than one channel, as those users tend to be more profitable for the bank, and they also have higher satisfaction scores and higher loyalty scores. So users who use multiple different channels are generally stickier users for incumbent banks. The important thing that Michael highlighted is not all banks are going to play the same role, and this I think is where SOFI, Technisys, and Galileo all play a part more. The fact that some banks will want to maintain all of their channels, all of the branding, and the expenses that is associated with that, whereas others will be wanting to put their products on non-banking channels through APIs to essentially be the brand behind the brand. It's important for banks to embrace change, to experiment, and to be willing to adjust as the industry evolves, because it's evolving very rapidly. And fundamentally, this requires a big shift in mindset from this traditional conservatism that banks have historically had to a constantly evolving, iterative mindset that tech companies have today. Banks are also trying to re-humanize that banking experience. Now, what does that mean? Well, I'll play a clip for this segment because I thought it was the most important segment of the entire interview. Michael highlighted 3 core pillars of how banks are trying to re-humanize that banking experience. Here's the clip.
We're looking at it from a number of different dimensions. Data is going to be key. How do I aggregate, cleanse, categorize data? How do I generate insights from that data? And how do I make those insights actionable? It could be something as simple as data visualization on the screen for you or the banker to understand, am I about to go negative in my account and have a non-sufficient fund event? Or am I meeting my savings and investment goals to buy the new house or to retire? It could be as simple as alerts and notifications, reminders to get certain things done. But data is going to be key to bringing back this human element. And also not just key for the end customer, but key for the bank, right? The banks are always struggling to figure out what I call the 5 R's, right? Right product, right customer, right price, right time, right channel. The second element is what we call conversational banking. These digital self-service channels are great, but we all sort of have fatigue in filling out e-forms and pushing a lot of buttons and then not always understanding why that is being asked or what they really are looking for in that data field. So we're starting to see a pickup in a type of artificial intelligence that we call natural language processing, right? NLP. So I have these preferred channels, right? Mobile app or internet banking on a desktop or laptop. I want to stay in my preferred channels, but I want the bank to be able to engage me in what we'll call plain English, whether that's spoken or written. And I want the bank to understand me. But this can be expensive for the bank, right? Because contact workers are not cheap, branch-based staff are not cheap. So you can put a natural language processor in there and create, chat bots or intelligent virtual assistant-like experiences. And then if the customer requests to switch to the human or the chatbot recognizes, right, I can't answer that question, or I can sense right now there's new technologies to sense frustration. So we call that sentiment analysis, and it switches you to a human. But the good news is it takes that whole chat history with it so that the agent who takes over isn't starting from scratch. And it also, most importantly, you're remaining in that channel of choice for the customer. We've already talked about a third dimension of humanizing banking is I don't want all my banking to be in bank-owned channels. The simplest example, which we're all used to from the last 30, 40, 50 years, is I'm shopping in a store and I want to pay for my goods and services. Imagine if you had to leave your restaurant or your store, walk to the bank branch, get the money and then come back to the store, right? That sounds ridiculous in this day and age, because I just swipe my credit card or my debit card and I'm good to go. And, now I have digital wallets doing the same kind of experience. So we all know and recognize embedded banking from these use cases, but now we're starting to see it explode. I'm setting up my new Tesla and immediately I have insurance options on the spot as part of the car buying experience. I'm buying a ticket on delta.com, an airline ticket, and I can rent my car, I can rent my hotel, I can buy travel insurance, I can pay for my tickets, all while remaining in that non-financial brand, an airline brand. So we're starting to see this point of need concept really taking off and being further empowered through the use of these new technology we call APIs, right? And then, of course, we're seeing completely new offerings that we never were able to see before, because we used to not only build the bank in these product silos, but we would also build the systems in product silos. Imagine a world where buy now, pay later, early wage access, roundup savings, all these things require me to have building blocks from the payments world, the lending world, and the deposits world, and reassemble them in completely different ways. You can't do that with a COBOL and mainframe system. You can do that when my Lego building blocks are microservices, and now I can start to recompose them in completely different ways and generate things which we're now starting to take for granted, right? Shopping using buy now, pay later. The banks are getting into the games and not just the fintechs. It's not possible on some of these legacy architectures. Ultimately, what that means is these customers have a need and the banks were unable to fulfill those needs, and the newer digital challengers reassemble things in new and unique ways and sort of humanize banking in that aspect, right? Now the banks are able to catch up.
So just to summarize this clip, the 3 pillars were: number 1, collecting and visualizing data to personalize that customer experience. Number 2, using conversational banking and AI to engage with customers in plain English, so simplifying that process through the use of AI. This requires the shift of the workforce, like we mentioned in the past. And number 3, diversifying away from bank-owned channels. So here Michael used the example of the airline, where I can also book a rental car and now I can also book a hotel, all in that same portal. And that provides flexibility to the user because it's not limited to the bank channel. And when you put all these 3 factors together, they allow for new product ideas and easier connections between products, which ultimately leads to new offerings like buy now, pay later options is one prime example that we've seen this year. Michael wrapped up the video by saying that to truly future-proof, banks must also embrace tech concepts like SaaS models, cloud computing, and putting the customer at the center of their design thinking, essentially collaborating with the customer on where to innovate next, not being afraid to take risks. The whole theme was breaking down silos through collaboration to basically iterate on what's working and scrap what isn't working. By broadening their approach, banks can better adapt to this constantly changing industry. Today, it's fintechs leading that march, but I think legacy banks with their deep pockets and with their depth and breadth of expertise can definitely catch up in time. And ultimately, if these legacy banks want to survive, they are going to have to undergo some digital transformation. Fintechs inherently understand this dynamic coming from a more tech background, this understanding of I have to constantly iterate to stay on top of the game as opposed to settling and being comfortable and resting on my laurels. And catering to customers is at the heart of this entire experience, thereby rendering many of these legacy experiences redundant. Because how fintechs have initially caught up is they've created a better mousetrap. They've created a better way to interact with, include, augment, or create a seamless experience for their end customers, which legacy players have traditionally not done. And ultimately, just wrapping up this video, that's another reason why I wanted to feature this interview, because it demonstrates how Technisys is naturally understanding this dynamic. And by doing so, they understand the landscape of this need for legacy players to innovate and the advantage that fintech currently has, and also where this industry is going as a whole. So for example, some things in the future are AI, conversational banking that's going to replace the human workforce. Number 2 is the IoT channels is going to replace mobile. This has a strong potential to happen because it further iterates on how people are naturally banking and how it's less intrusive into their lives. So how we can automate that existing experience to make it much easier for these people. Anyways, if you enjoyed this video, I highly recommend that you watch the full interview, which is going to be tagged in the link below. And if you learned something new, share it out with someone who you think might be interested in this information as well. I regularly cover SOFI news, analysis, and commentary on this channel. If you're not subscribed, this is your chance to do so now. For right now, this is the Fundamentals of Investing podcast. Thank you so much for listening.